Hi, everybody. My name is Jared Bayless. I wanted to do a quick video. When in one of my previous ancillary roles, one of the questions I got asked the most when it came to group dental insurance was what are MAC and UCR plans and what's the difference? So MAC and UCR, these terms relate to out-of-network reimbursement specifically. Let's talk about the definitions and the basics of each one. MAC plans, also sometimes referred to as PPO fees, it stands for maximum allowable charge. Now, I want to make the point that in network, these plans work the same, whether it's a MAC or a UCR plan. The member goes in, they're charged a contracted fee. If there's a balance left over, the dentist just writes that off. Now, if somebody on a MAC plan goes out of network, the MAC plan really limits the amount that a dentist can be reimbursed for a specific procedure. So if the dentist charges more than that amount, then the member's balance billed, and they do owe a balance. UCR stands for usual, customary, and reasonable. Again, in network, the dentist is going to write off any extra above and beyond the allowed amount from the insurance company. But if they go out of network or to an out-of-network provider, to determine the reimbursement, the insurance company typically is going to use a third party like Fair Health or some sort of method to determine what the average charge for each procedure is in a specific geographic area. And it's not just state to state, it's typically zip code to zip code. So they're going to base their out-of-network reimbursement payments on that amount. Some will pay at the 70th percentile, some will pay, it's more common to see the 90th percentile. And what that means is that 90% of the dentists in that area charge that amount that the insurance company is using as a reference or less. So another way to look at that is 9 out of 10 dentists in that area are going to charge that amount or less. The member's not going to be balance billed, but the 1 out of 10 that they go to is going to have some sort of balance bill that they're going to have to pay. So let's talk about the pros and cons. So really the pros of a MAC plan is that the group and the members are going to save money, right? It's 20 to 30% less than going with the UCR plan. Also increased in-network utilization. So the plan's going to run really smoothly. There's not going to be balance bills. There's not going to be claims administration issues or people having to file for the out-of-network claims. One of the cons, the biggest con of this solution is members who use out-of-network dentists are likely going to be balance billed, and it could be a decent amount more than if they were on a UCR plan. So let's talk about the pros and cons of a UCR plan. The pros is it's really helpful, and these plans pay more when you've got somebody who goes out of network. The cons are low transparency and reimbursement rate calculations. It's really hard to predict what members are going to be charged for a certain procedure because it's going to vary from zip code to zip code. Also, the other real con is there's a higher monthly premium for all employees. So if you've got 2 employees in a 100-person group that are out of network and don't have access to in-network dentists, you're probably not going to want to go with the UCR plan because everybody in that plan is going to have to pay 20 to 30% more than they would if they were on a MAC plan. So let's talk about a quick example. And this is Laura. A couple assumptions that I'm making here is that Laura's already met her deductible and she has not met her annual maximum benefit. So she still has money left. So let's say Laura goes in for a crown. So if she's on a MAC plan, the dentist is going to charge $1,200 for a crown. The maximum allowable charge is $600. That's what the company is allowing. Now, because it's in the major category of coverage, it's going to be covered at 50%. That means the insurance company is going to pay about $300. Because the dentist charged $1,200, $1,200 minus $300 is $900. So that's what Laura's going to pay on a MAC plan for this crown. On a 90th UCR plan, still the $1,200 charge. The allowable amount or the RNC fee from the insurance company is $1,200. So they're going to allow that charge. Laura's plan pays 50%, so they're going to pay, the insurance company is going to pay $600, leaving with Laura with $600 to pay out of pocket. Now, if the dentist charge was $1,300, $100 above the RNC fee, Laura's going to have to pay that extra $100. She would pay $700 out of pocket. Again, that's 1 in 10 dentists in her area, so likely that she's not going to be balance billed. So let's recap. What groups are good targets or good? When does it make sense to use a MAC plan? So groups who are looking to save money on dental insurance premiums are really going to want to look closely at a MAC plan. And especially if they intend to use in-network dentists as much as possible, this is going to be a really good solution for that group. Now, when's a UCR a good solution? So if they're looking to lower out-of-pocket costs for people who are going out of network, that's going to be a good target for this solution. Typically, this applies or works well for groups who have, multi-state populations or rural populations, because the network's going to be a little sparse in those areas sometimes. But the bottom line is, do they have in-network coverage? Do they have sufficient in-network coverage or not? If the answer is no, then you might want to look at a UCR plan. Now, the cool thing is, a lot of companies will let you do a dual option plan where you put a MAC and a UCR plan side by side. And then the people that have great in-network access can choose the MAC plan and save money on the premium. And the people without good, in-network coverage can choose the UCR plan, pay a little more, but then get better coverage when it comes time to, get work done or have claims. So that's it, you guys. If you found this video valuable, please share this, repost this to your LinkedIn network. Please share this with your colleagues, your friends. I would sure appreciate it, and I hope you found it helpful. Thanks so much. Bye.